All right, guys, hope you had a great weekend. Kicking right off with Best Buy, BBY. So courtesy of Paul. Anecdotally, he said Best Buy was rammed this week. So looking at the chart here, it's been trading between roughly 95 on the downside and the upper end around 125, which is the all-time high. So looking at this chart right here, it's pushing toward that region right there. And I think they report earnings in a few weeks. Let me just verify that one sec. Why? So they report earnings, it'll be in May, actually. So no, not a few weeks, a couple months away. But looking at the chart here, if we do get some volume push above 125, we could see that area become the new support level, right? I haven't looked at the option chain too much, but we'll get it right now, just quickly. So looking at the option chain, which is right over here, we can see that for the month ahead, we'll go on a monthly time frame, not a weekly time frame. So using the current option pricing, we can expect to move around $7-8 in one direction from the current price. So upside would be 126 all-time high, downside of 112 or so. Liquidity isn't terrible looking at it right now. Spreads are not that bad. So you can see that I can only see right now the $5 increments on the option chain here, but obviously they're adding more increments as we approach expiration dates. So they'll add the $1 increments as we approach. If you're bullish on it, obviously you can look at using some call spreads. IV is actually pretty low right now. So if you want to go longer term, you can do that too. Like let's see about June, perhaps go 3 months out. Yeah, the 120 strikes are about 750 or so. And yeah, I mean, you could always go long 120s for June, and then spreads here are too wide on the 140 strike, maybe the 135 strike. So you'd be risking about $5 a premium, maximum profit of $10, right? Obviously that's under the thesis that it would hit all-time highs and then use that area as support. So maximum profit would be above 135 from expiration. This is a 3 month long play, right? So not a short-term play at all. Otherwise, I'm not really sure what else I would do here. Looking at the chart again, the support area was 95 or so, and the premiums in that area aren't very high. Like right now, you're getting about $1.70 or so, $1.70 a premium, a few cash secured puts at 95. But again, you got to put up collateral of like 9.5K. So not really great asymmetry of risk there. And also it's 3 months out, so not really worth it. Yeah, I'd look at call spreads perhaps out of the money. If you do think it's going to burst above that 125 all-time high and set a new range. That's just kind of an idea that Paul threw out there. But looking at TECK as well, they've had a pretty poor performance the last month or so, and I'll pull up the chart here so we can see that. So TECK, Tech Resources, they mine iron ore. On the shorter term time frame, the 1 month chart, we can see that they are trading near support right now, 1 month support, right? So right around the area of 20 or so, right? The upside is around 23-ish, 24-ish perhaps. Here's a longer term time frame as well. You can see, if you pull out even further, you can see that it used to trade at around $60 a share, right? So it has potential to push back up, especially with inflation. So they mine a lot of iron ore and copper as well. Looking at the option chain here, I haven't looked at it too much at all myself, but I'll pull it up right now too. So we can see the option chain here, Tech Resources, and liquidity is not great for this coming week. On the monthly OPEX, there's a bit more. Spreads aren't that wide, which is nice. And the asymmetry of risk here is okay on the short-term timeframes. IV is roughly near the HV as well. So looking at the option chain here, I might think about doing like a 20-23 call spread kind of thing. In this case, you'd be long 20, short 23. And that would be a debit of around 85 cents, maximum profit 215. And obviously a break even is 20 plus 85 cents. So 20.85, maximum profit occurs about 23. Not a terrible trade overall. Might be a better longer term trade if you believe that the commodity prices are going to keep rising with inflation. So, I mean, looking at even a year, the at the money contracts are going for about $3.80 or so. So break even of 23.80, which is where it was trading at a few weeks ago. And as we saw from the longer term chart, it does have upside to around $60, perhaps even higher. Obviously, this is on a longer term time frame, right? Because that was the 10-year chart. So keep that in mind that it's a very long term trade if you are going to play that on the longer term time frame, right? Otherwise, I want to discuss the Crispr stocks today, right? So I've been reading the book, The Code Breaker, which is all about CRISPR, and it's very interesting and it's making me think a lot about the future of gene editing and where it's going to take us, you know, in the medical fields. There are going to be a lot of applications for it, I think, between agriculture, medical treatment, you know, for cancers and diseases, as well as allowing people to create designer babies. You know, obviously the ethics of which are questionable, but there is the potential that going forward in the future, there may be a time when people can actually, you know, pick and choose how tall they want their kids to be, how strong they want them to be, how smart they want them to be, you know, their eye color, their hair color, which is kind of scary to think, right? But we're not too far from that time, in my opinion, right? Very good read so far. I recommend reading it. It's by Walter Isaacson, same author of the biography of Steve Jobs and Benjamin Franklin and Einstein as well. So I'll pick it up if I were you, if you want to read a good read on CRISPR. But looking at the names that CRISPR encapsulates, so let's start off with the big name, which is CRSP, right? That's CRISPR Technologies, right? Or Therapeutics, rather. So we saw that it hit a high of 220 or so back in January, pulled back down, touched 100, and then bounced back up to 128 or so. Now, long term, I think this is a probably pretty good investment. But looking at the fundamentals right now, we can see that they are worth 9.3 billion. So still a pretty rich valuation considering that their sales are only about 700K right now, right? There's also a company called Editas Medicine, which I mentioned a few times. It's EDIT, right? Same kind of chart as CRISPR. You just saw almost the exact same chart. If I go back again, you can see again the charts almost overlay perfectly, right? And Editas is now trading at about 45 or so, and their valuation right now is under 3 billion. So the asymmetry of risk there is probably better in the longer term, given that they're worth about a third of CRISPR Therapeutics. That being said, obviously they have different fundamentals internally as to the progression of their medicine right now, and also the teams they have in place. There's also a company called what was it called? Beam Therapeutics, right? Beam, and they've had a pretty strong run this year. They're also a very, very strong company in the CRISPR space too. And they pulled back to about 60 a few weeks ago, and now they're at 91. Here's the 1 year chart on them. 1 year chart. You can see it dropped down to about 60, and now it's at 91 again. Again, looking at this company right here, Beam, they're worth 5.55 billion. So in between the valuations of Editas and CRISPR Therapeutics, and they're not making any sales right now, pretty much. So they're all operating at a loss, right? But these are kind of like companies that I think people are going to look back on and say, okay, well, you know, back in the 90s, you know, investing in tech wasn't very appealing because everyone said, oh yeah, why would you buy a company that's worth billions when it's not making any money, right? Well, you know, fast forward 20 years and you see these Amazons and Apples and Googles, for example, that are dominating industry, right? But back then, you know, if you had the foresight to buy and hang on for the long run, I'm talking like, you know, 5-10 years out, that's when you're gonna get the big payday. Because if these companies if and when these companies take off, they could be worth, you know, between 50 billion and 100 billion, perhaps even more individually, right? So a company like Beam, for example, which is at a valuation of 5 billion right now, they could be worth 50 billion in the next 5-10 years, right? That means that the current stock price is very cheap because they could trade at a valuation of 10 times the current price. So let's say they traded $1,000, and then for Editas, they're worth 3 billion. So again, same thing. They could trade at a valuation of, you know, 500 to $1,000 per share, right? And who knows when that's going to happen? Obviously, it could happen next year, it could happen in 2 years, it could happen in 5 years. That's why I prefer to take a long-term approach and say, you know what, I think my portfolio needs to have some of these companies in it. I'm not sure which one's going to be the best company in the long run, because obviously it's hard to tell, but why not sprinkle around, a little bit of cash in each position and hang on to it for the long term and say, you know what, this is money I'm going to forget about for a few years. And, 5 years down the road, perhaps I'll be thanking myself for having the foresight to invest in a company that I believe is going to change the way we do medicine, right? Or agriculture as well, right? Or obviously, having kids, that will be a very, very different paradigm shift if we see people start having a designer babies, right? And then obviously there'll be a big ethical issue there as well, right? The other corporations, there's also one called Intelia, NTLA. The same kind of chart as we just saw with Beam, right? So they're trading at 65 and change. They were at 45 a few weeks ago. Valuation on them, NTLA, they are worth 4.2 billion. Currently doing 58 million in sales. So again, these are longer term trades that are not trades. They're more so investments, right? Not trades, so investments. So you got to be okay with parting with your cash and leaving it there for a few years in order to see to fruition the overall thesis. But obviously, I recommend reading the book and understanding what I understand. And then, I'm not finished the book yet, obviously, but I think, once I finish it, I'm going to be even more convinced that it's going to be the future. But if you read the book, you're probably going to feel the same way that I do longer term. And again, this could be like investing in Amazon or Google or Apple before they took off, right? Also, there was Clovis Oncology, which had a nice big pop last week on Friday. Massive, massive pop. And keep in mind, this company right now is heavily shorted. They have 42% short interest, right? So on Friday, if you note the volume here, guys, check this volume out, right? On the 10-year chart, this volume was the highest volume we've seen in 10 years, right? Or at least back to like 2011 or so, right? So this right here could be the start of a short squeeze, and it's possible we see a push to around 20 bucks in the next few months. Longer term, they're working on oncology for breast, ovarian, and prostate cancer. And I think they have a very promising outlook as a company. Current valuation is $500 million. They're doing 164 million in sales right now, which is pretty impressive. So they're trading at a price sales of about 3.4. And they actually got an upgrade on Thursday. They got an upgrade from HC Wainwright to buy, target price 33 bucks, right? So keep an eye on them. I'll put the option chain just quickly if you want to see, but again, stocks that are trading below 10 bucks, it's probably better just buy the equity itself, because then you're not concerned about IV or expiration dates, right? You can just focus on owning the asset and perhaps selling premium on it if you want, right? I have a few shares, not very many, but I'm going to probably buy some more on this equity and take the longer term approach. But you can see if you want to trade options on this, let's say you go out of the money, for example, there's some pretty good asymmetry of risk. Like, let's say you do the 15 call long, short the 20, right? You can get them for about a debit of around, midpoint here is very wide, right? So wide spreads here, but they should tighten up a little bit. So let's say you get it for about 50 cents. So you're risking 50 cents to make a maximum profit of 450. So 9 to 1 risk reward, and that goes out 4 months, right? If you want to take the longer term approach and you don't want to buy shares, I don't know why you wouldn't, assuming you're bullish on this. Again, do your own research, due diligence, whatnot. Don't listen to what I'm saying about this and just take it as gospel, right? Use your own ideologies and your own theses to make your decisions, right? But for a $7 stock that has potential to go to 20 bucks, and we saw that at one point in time it's trading near 100 bucks. If it does short squeeze, it could go to 20, 30 bucks pretty easily, right? So looking out to January 2023, if you were to buy call options, let's say you don't want to invest in the stock and pay $7, again, buying out of the money call options for like $2, $3 versus buying the stock doesn't make sense to me, right? You're better off buying the stock and not worrying about expiration dates or IV. But this should be an interesting trade going forward because of the short position in the market has right now at 42% or 43% short interest, right? Otherwise, right now, looking at, let's see, looking at Shake Shack, right? This is interesting too, right? Because they're trading well above where they were trading prior to the pandemic, right? And the company fundamentally right now they're trading at a valuation of $5 billion with 500 million in sales. So price of sales of about 10. Just to contrast that, McDonald's right now is trading with price of sales of around 8, right? So a little bit rich valuation wise versus McDonald's. But Shake Shack right now, their revenue growth year over year, they're actually down year over year by about $70 million. Yet the price is at all-time highs, right? So I'm thinking that we're going to see a pullback perhaps in the short term back down to 110 area. And we had a nice double top on the chart overall right here. Like I think that, yeah, so we hit over here previously 105 before the pandemic. If I zoom in on the chart, we can see that we hit 130 twice over here. So this area is pretty heavy resistance right now, right? The 130 area. And I think we can pull back down easily down to this area of around like 110 to 100 or so, right? The only problem is that the option chain isn't super liquid. So I'll pull that up right now. You can look at it. But again, you can see right here that the open interest and volume is very low. And if you go to the monthly OPEX, we can see that it's not very high still, right? So you gotta be careful trading this if you do want to trade an idea like this on the downside. Obviously, I think the 120, 110 perhaps, but again, keep in mind, look at these spreads, right? They're way too wide. So I always say that if the liquidity isn't there, you don't want to trade it. So perhaps, maybe just look at this as an idea as to what could happen with Shake Shack on the downside move and maybe apply it to a different equity in a similar position right now. Because right now we have some of the worst performers over the past week or so. There was Penn Gaming down about 10%. Palantir was down 10% as well. I've mentioned that for the past few weeks. You can analyze Palantir if you guys want as well. So Palantir, one sec, where's the chart? PLTR. Right, so let's go back in here, 5 months out. So you can see that we're at 24 and change. And basically anything below 25 is a decent buying area. It has been the past few months. Whenever it goes below 25, it bounces back up to around like 27, 30-ish, comes back down again. So not a bad idea looking at, a longer term position on Palantir. The IV has been dying down like crazy. So calls and puts are very cheap right now. The IV is around 70%, if I'm not mistaken. Let me just pull that up right now. So IV on Palantir, PLTR. Yeah, you can see 71% right here, right? Historically, it was 108%. And if I actually look at the the longer term chart on the IV on Palantir, pull it up for you guys to see. So you can see right here that the longer term chart on Palantir for IV, this is the 6-month chart of IV. So right now, the April contracts are trading at the lowest point they've ever traded at. The May contracts are trading almost the lowest point they ever traded at prior to October or so. And the June contracts are trading very low as well right now. So looking at calls longer term might not be a bad idea. I'm talking to, perhaps a year out because the IV is so low. Keep in mind that they're gonna have earnings in, let me see. I think their earnings are gonna be, they reported back in February, mid-February. So looking at March, April, May. So mid-May will be when they report. So if you're trading out to the May OPEX, that will cover you for ER. And we could see a rally into earnings, right? So somewhere around like 30, 35 bucks per share into earnings, right? Somewhere around like perhaps somewhere around the May timeframe, right? Otherwise, there are a few more names to look at too. Apple, I mentioned last week, is still pretty cheap. I'll pull the chart right now so you guys can see it. It had a nice pullback on Friday too. Here's Apple right here. Get rid of these lines. See the 1-year chart. So we pulled back down to 120 on Friday, pin that level right there. But as we approach their earnings, which will also be in late April, early May, we should see a rally back up to 130 area, perhaps in the 140 area prior to ER, right? And they have some new product launches coming up as well with new iPads and new MacBooks as well, right? So keep an eye out for those too. And also, I believe AirPods, not the AirPod Maxes, but the AirPod Pros. I think they're releasing a new version of those too, right? So keep an eye on Apple as well. Apple's, a great long-term play, as I mentioned last week. Buying leaps on it isn't a bad idea, and averaging down whenever it pulls back. We could see the 100 area on a sharp market downturn, that would be a great area to buy. But right now, support would be heavier around 110 or so. I don't expect it to pull back to 100, but again, you could see it pull back to around 110, and then obviously down to 100 if it pulled back even further. That would require a broad market sell-off, obviously, because right now it's already down from its high. It's down, about 18% or so from the high, right? So that's a pretty good discount on Apple. Same thing with AMD as well, right? AMD, I mentioned a few times the past few weeks, and I'm still very bullish on it because this formation right here reminds me a lot of this formation where we pull back over here, we pop back up, kind of like, this pullback right here, pop back up, and then it fell again right here, right? Followed by a further rally into earnings, right? So that'd be kind of this formation right here, similar, we're seeing higher lows, right? And we'll see probably higher highs on this time frame as well. So it could push back up above 87 is the first level I want to see, and then following that, I want to see about 94 or so. And if it gets above there, then obviously we're within reach of all-time highs around $100, right? But I do expect AMD to finish the year higher than it is right now. I think by end of the year we'll see it trading between 100 and 120 a share, right? So take that information as it will. Obviously, again, guys, do your own research, do your own due diligence, make your own decisions, manage your risk very well, right? Remember, just because you have a conviction on a position doesn't mean you need to go all out on it. Take small risk, especially when you're buying options. Don't put a lot of money into short-term contracts. If you're investing longer term, obviously you take more risk, because if you're buying stock or you're buying leaps, for example, they don't expire very fast in the case of leaps, and stock doesn't expire at all. So you can always average down, right? But scale in, buy gradually. Don't get too gung-ho and just buy all at one price, right? If you want to allocate, let's say, for example, 10% of your portfolio to a position longer term, you want to allocate, 2% initially, 2% on a small pullback, then you're allocated 4%. It pulls back more, you buy 2% again. It pulls back sharply again, you allocate 4%. Your average price will be much, much lower. Let's say, for example, you wanted to buy AMD in this time frame over here, and maybe you thought it was going to push up to all-time highs in this area right here. So perhaps you put 2% in over here at around $94. It fell down to around $80. You bought 2% more. So your average price then would be between 94 and 80 would be 86, right? And then it popped back up to 86 over here or so. And you said, you know what, I'm going to wait again because it's at your average price. And then it pulls down to 75 and you buy 4% more, right? So now your average price would be 4% at 86, 4% at 73 or so, 74. Now your average price is down to about 80, right? That's a great average price to have. And then you have 2% more to allocate to your position. In the case of it pulling back, once more to around 75, you allocate 2% more, and now your cost base would be around $78, $79 per share, right? So not a bad idea at all whatsoever. Otherwise, SPY and Qs, and then we'll finish up. Okay. So SPY, again, pulled back last week, bearish week. If you do the 1-year chart with the weekly candles, you can see that we pulled back right there. But we're still in a bullish formation here because we haven't pulled back below this area of 371, which we saw a few weeks ago. I do think we're still going to see a run to 400 on SPY. Obviously, that can change at any moment because of bond yields. Everyone's worried about bond yields right now, but they should stabilize at some point, and the market will stabilize as well. And also, I think we're going to see a rotation back into tech too, which is, again, Apple, Microsoft, Amazon, AMD, Apple. Speaking of Amazon, right, pull back again as well. You can see over here, right? So around 3,000 level. Over the past, pretty much since July of last year, it's sat pretty much right above the 3,000 area. So pretty strong support in this area. And at some point in time, we're going to see some news that will cause it to probably burst back up to all-time highs and push 3.5 to 4K per share, right? Lastly, triple Q ETF, you can see as well. So 2 fat wicks right here on the downside, similar over here to these wicks over here, right? And then obviously a pullback over here. So I would say, I'll be leaning bullish on Qs right now versus SPY or the Russell. But yeah, look at the names like AMD, Amazon, Apple. Facebook has been performing pretty well too, I think. Right. So here's the chart of Facebook. See, last week it actually burst to 289 or so. It's not very far from the all-time high of 304.67, right? So keep an eye on that because as we approach earnings too, right? I'm going to stop the video here and we'll do a Q&A session. If you enjoyed the video, share it with someone else. Please like it, comment, whatever. Otherwise, have a great week, guys, and we'll do Q&A right now, okay?